Hey there, welcome back to the Velocity channel. Listen, today we have an exciting topic for you. One that's going to help you maximize your credit card rewards while speeding up your debt payoff. And this is going to be part 2, so we're going to dive a little deeper into what we showed you in part 1 here, all right? We're going to help you achieve your financial goals even faster. So without further ado, let's dive right in. Before we get established, right, we need to make sure that we have a foundation set. Right? It's essential to have a clear understanding of your financial situation and set goals, right? So take a moment, assess your debts, and this includes your credit card balances, your interest rates, payment deadlines. Once you have a solid grasp on your current situation, you can then start strategizing. Now, let's talk about credit card rewards, right? Many credit cards, they offer reward programs. This is going to allow you to earn points, cash back, or other incentives for purchases you were already going to make. Your debit card probably doesn't do that, right? By utilizing these rewards effectively, you can accelerate your debt payoff journey. Now, here's a few key strategies to consider. Choose the right credit card. Now, look, I know we kind of dabbled with that on the surface on the last video. I want to get a little deeper right here on this video. Let's say you have a Chase Sapphire card and the annual fee on that is $299 each year. Now, I'm sure that's not the case, but if it is, I want to show you how that would still be valuable to you, even though it's $299 each year. All right, so we already know what this stands for, right? Income, $3,000. Expenses, $2,000. Cash flow, $1,000. Now, you just paid $299 for your Sapphire card, all right? So we're going to go ahead and subtract, let's just say 300. Can we round up? 300 from that Sapphire card, which is going to leave you at a cash flow of $700. Now, this is each month. Each month, it's $700 coming in. Now, $299 on your fee. That's annual, right? So go ahead and divide $300 divided by 12. What is that each month? Okay. And can you afford that? See, that's how you have to look at it. Plus, what are you getting from that $299? Each year. It's not monthly. It's year. Even though you could do it monthly. Look. Okay. And say it's $10,000, $20,000, or $80,000, $100,000, right? This is one of those high rewards cards, the Sapphire card, Chase Sapphire card, right? And this is just an example, right? Look at the terms and conditions, right? Please, because the credit cards, man, you should get my book, right? What credit card companies don't want you to know. They've gotten away with some crazy things over the years, okay? But one thing that they can't get away from is when they say annual fee, it has to be annual. And so you're paying this, yes, yearly. But what are you getting in return? Are you getting those massive flights, right? I'm talking about frequent flyer miles. The cash back, it's astronomical, right? Are you getting a benefit from it? What is the benefit? Is it outweighing the cost? Then of course you have your answer. And plus, when you Velocity Bank, you're not dividing up your income. See, this $2,000 is sitting within the credit line. Oh man, it's sitting within that credit line. It's sitting within that credit card. So it's paying off, this cash flow is paying off the credit card. So you don't have a minimum monthly payment. You can just toss that away, okay? Especially when you're having $3,000 each month going into that card and that minimum monthly payment is way below that, okay? So that's one thing that we need to consider when we consider credit cards. Let's continue. Now, the other thing that we have to keep in mind is we need to track our expenses. This is going to be very, very simple, especially when we use the Velocity banking method. We categorize our expenses, don't we? And by understanding your spending patterns, you can leverage your credit card rewards more effectively. Let's give you an example of that. All right, so as stated before, right, we need to make sure that we are categorizing our expenses correctly. But this is something perhaps that you haven't been taught before. I want to get a little bit into this right now, and that is splitting up your expenses and then justifying them correctly according to the category. All right, let's go ahead and get started. For the groceries, right? That's going to be underneath the lifestyle category, all right? This is your lifestyle, this is your vacations, this is your groceries, right? Those things that are essential. Absolutely, vacations are essential to your well-being, lifestyle. Insurance, right? That's a protective expense, okay? This is justified. Why? Well, because if something happens, not saying that it will, heaven forbid, right? But if it does, you've got that protection underneath good insurance. And then you have, of course, education, which is going to be justified by the production expense. That's what you're producing. This is what you need. See, these expenses, right? These categories is what you need, okay? You need production expenses, okay? Education, right? Whether it's real estate investing education, whether it's how to own a business education, whether it's, let's say it's a program, right? Business credit building program, all right? For, all of these things, you have to make sure that you are producing and investing in yourself, okay? Because you are the best investment. Now, let's give a number, right, to each of these expenses, and that is $5,000 for education, right, one time, and then insurance, $120 each month, and then we have the groceries, $1,200. Now, I know that this can be a challenge to split up, right? Because here you are, you're with your ledger, and you're trying to write all these things down. However, may I just hand this to you, submit this for your consideration. Let's put it all underneath one umbrella. This is what I'm talking about. Let's have all of these expenses go towards the credit card. Why? So that you can get rewards for things that you were going to spend on anyway. Now, I know you may be saying, wait a minute, CJ, what happened to the destructive expense? I'm saying these are the things that you need. Okay, let's go ahead and get rid of or eliminate those destructive expenses and focus on our producing expenses, protective expenses, and lifestyle expenses, and bring them all underneath the umbrella of that one credit card. Why? Because guess what? We needed those things anyway. So we might as well be rewarded for investing in ourselves, for paying for things that we want and need, right? We might as well be, right, rewarded for paying for our insurance, for paying for the things that we desired anyway. Let's get rewarded for it. Now, we're going to talk about how to pay off that balance and what we mean velocity banking style. All right, we want to make sure we're paying our balance in full. Now, listen. To maximize your rewards, it's important to pay off your credit card balance in full every month. By avoiding these interest charges, you can fully benefit from the rewards without getting caught up in that unnecessary debt. Now, what do we mean by that, right? We mean that if you can take your card, right? And I'm not talking about maybe the one that you're using for other expenses, but if you can take that rewards card and you can pay that off every month, right? Listen, folks, this is what we mean by paying it off every month, okay? Can we just make sure that we know the difference between the statement date and the due date? Why? Why do we need to know the difference between the statement date and the due date? Because you see, when you have a due date, right? Remember, you're during the grace period, right? 20 to 25 days grace. And that statement date is when that billing cycle is done. What you want to do is pay when? Due date or statement date? Well, you want to make sure that you're paying on the statement date. Man, let's get that out of the way early. Now, of course, if you're getting rid of loans, right, and you're getting rid of your mortgage, you're getting rid of your car loans, listen, that's okay. Rack up those rewards, right? Because you get rewarded for using that credit card. right? And you're also going to get rewarded because you're using it faithfully and responsibly. Now, knowing all of the borders of the credit card, knowing the borders of the credit line is going to be important. That's why I say, let's go ahead and make sure that if you can, pay that off every month and pay it on the statement date rather than the due date. Okay. We don't want to just give ourselves enough room to hang ourselves with. We want to stay right within the good graces of the lenders. We want to stay in the good graces of the credit card companies, the credit line companies. Why? Because we need more and more credit. And that's actually all I have to say about that. Now, what I want to do is I want to get to this last section. It's going to be so exciting. So let's get right into it. All right, folks, you're going to have to use a little bit of strategery here, right? You're going to be strategic when you're using those rewards, all right? And this is what I mean by that. Once you've accumulated a substantial amount of rewards, it's time to redeem them, obviously, right? Consider using your rewards, number one, to pay down the credit card, right? Or to pay off the principal balance of the loan. Apply them towards the debts that you need to be concerned about, which is you're going to put each debt, each loan, right, within the cash flow index, right? Loan balance divided by the minimum monthly payment, and that's going to be your number. Remember, 0 to 50 is going to be the danger zone. That's 0 to 50, right? Danger, right? If that number is between 51, okay, let's just do it, 51 to 99, that is the caution zone, okay? Anything above the 99, anything above 100 and above, right, is going to be the freedom zone. So usually mortgages are in the freedom zone, usually those things that have a way lower minimum monthly payment versus the amount that you're getting is going to be in the freedom zone. All right. So that's how you categorize your debts and which one you're to pay off and which ones you are to use your cash back on. All right. And remember what you pay with the rewards that you're getting. What do you pay? The balance. The principal, right? Because the principal is what the interest is feeding off of. You don't want to just go ahead and say, oh, $1,000 to my credit card, no, $1,000 to my loan, or $1,000. No. You want to attack that principal balance, right? Because the interest is feeding off that principal. The smaller the principal, the smaller the interest, okay? So we want to make sure that we're doing that and using our rewards strategically, all right? Now, there you have it, all right? By implementing these strategies, you can actually make your credit card rewards work for you, helping you pay off or eliminate your debts much faster. And remember, responsible credit card usage is the key. Stay within those means, pay your balance in full, and use those rewards strategically. Now, if you found this video helpful, please give it a thumbs up. And don't forget, remember to subscribe to our channel and absolutely share it everywhere, because everybody in the world needs to know about the cash flow index, about how to pay your mortgage off with credit cards and credit lines, about how to eliminate your debt, build your wealth through your debt. Thank you so much for watching. God bless, and you guys have a great and wonderful week, month, life.